All right, it is 2 o'clock and we are going to get started. It's 2 o'clock Eastern Standard Time. So as a reminder, we do these trainings on a weekly basis at 2 p.m. every week. We'll be here because our goal is to support you, and by you we mean our community business offices, our operators, and operators. If you have um, business leaders that are in need of some extra support. If there's a gap that we can fill, Tatum Accounting Services is here weekly for you. So let's jump right in. As you see on the screen, my name is Burdette Tatum. I am the CEO and founder of Tatum Accounting Services, and I really enjoy these training calls. I've been doing these trainings for quite a while. And I know there's a need for some of this material, so really wanted to just put something out there to help our business office. So jumping right in, last week we talked about move in, and we kind of did a basic move in. I'll do a recap today because before that we looked at the reservation process, and the goal was to align the financial data that needs to be captured there. And so we talked about what financial statements are affected through that reservation process, through that move-in process. And today we'll just have a conversation on more about move-ins and some good best practices, some things to keep in mind as you're going through the month, and just all around talk about the business office, some things that'll be helpful there. So to recap, we'll go quickly and touch on, if you guys remember, we talked about, like I said, the reservation process. And if you we know from the training that the reservation process interacts with the balance sheet. Okay, and let me switch that on my tab. So when we're doing that process, that is going to interact with the balance sheet, like we saw last time, because we're putting a charge on a ledger. That charge is linked within your system to some type of liability account, because the reservation deposits that we take, we know in our industry, if the resident does not move in, there's a good chance that deposit will be refunded. And so on the accounting side, we will not count that as revenue. So if you remember, the first step was a charge. That's why we have AR, and that's linked to a reservation deposit. Because in accounting, it always has to balance, right? It always has to balance. We can't do a one-sided entry. We have to say, okay, if AR is going up, something else has to go up. In this case, we've got assets going up, then we got to have liabilities going up. Because remember that equation that we talked about, it's got to be a balance there, right? Assets equal liabilities plus equity, or assets minus liabilities equals equity. So that was step one. And then we know second step will be to put the money in the bank. Again, we already talked about this. When we put the money in the bank, that does not increase our financials because we have to wait to that to record it. Now, whether that automated, when the money hits the bank, it goes into the accounting system. But just to point out, we put the money in the bank. Now we also have to record it in our GL, because we want to say, this is what we did to the bank. And in our GL, we're saying we put money in the bank, so cash should increase. So that step is when we deposit, or the third step, when we record the receipt. So charge, because it matched the reservation agreement that we have in front of us. That's the document acknowledging the charge and deposit that they're putting in. We put that money in the bank, and then we do a transaction to put that in our accounting system. And by that transaction, by that journal entry that's being made, because when you batch that receipt, that understand that's essentially a journal entry being made into the system, and the system is going to increase the cash. And so once you do record that, and we know the cash is increased, now we're saying, okay, they've just put cash in the account. Now the AR goes away because the resident's paid, right? The deposit will go away. The resident's paid, so the ledger goes down. And so now we have cash in the bank and we have a reservation deposit. Okay, so again, all on the balance sheet and interacts with the balance sheet. So that kind of stops there until move in, which is what we covered last week. Okay, so why is it important for me to know what financial statements are being affected when I'm making these entries? Well, I mean, you are able to be a value add as you're understanding the business side, right? What's going on when I put this in? What's really happening? How am I impacting the financials? And again, I've said it a million times, but your role, you are producing the financials. I mean, all the data, all the entries that you're making, that's building the financials. And so our passion is if we can help you understand that and just reinforce and helping you. We believe that if you understand that, then the accuracy and really knowing where things go, you get that right on the front end. So that output product, when the property accountants grab it, whether they're with the operator and they're grabbing and looking through it, that information is intact and you understand what they're looking for. So then we say, all right, well, when it's time to move in, the relationship now involves the income statement comes into play, right? So from the balance sheet, from just a reservation, now we get into the income statement when they move in, because once they move in, that refundable deposit is now can be counted as revenue because it's not really refundable anymore. So now we can say, all right, now let's move that over and recognize that community fee income. But then there's also some more charges that we have to do because they're in the building now. So now we have to build the residence and all that stuff. And again, we talked about that. And so now we have new AR to build, right? So we build a full month of 5,500 if they moved in at the beginning of the month. And so that's just like last scenario, that's going to increase our AR. In this case, the offset though will be our profit and loss statement, right? So when we build AR in this case, the revenue, that's immediate revenue. So we're going to show that accrual basis, we're going to show that revenue here, right? So say this is assisted living, right? So you see now from reservations to get to the move-in process, we're now moving from the balance sheet and we're now also interacting with the income statement. We have somebody that's moved in because we're charging them. Our community provides care for our awesome seniors. And so that's the business that we in. So that's our revenue generator. And that's why as we bill for these services, the P&L is being impacted. Right. And I'll just get this out the way here. So you may hear income statement, you may hear P&L, you may hear profit and loss statement. We're talking about the statement that shows revenue and expenses. And then it's that NOI number you hear about all the time, right? Net operating income. And then there may be some expenses or revenue under that. And then you may have your total net income. But that's what we're talking about. So once we get into the move-in phase, we are interacting with the balance sheet and the profit and loss statement. So I hope that's clear. So again, very important to understand what that's doing. And as you're getting questions month in, as your accounting group is interacting with your community, your presidents, and they're getting questions about, because this is just one resident. You're talking about 50, 60, 100, 200 residents in the building, those numbers are going to be a lot bigger. So if you can just understand, though, the things that are happening, then you're able to, run down some questions that may come in, because now okay, this function I was doing is populating these financials. Okay, and so now when I get some of those questions, I can say, okay, well, let me backtrack and think of the steps that I've done. It just overall allow you to have more confidence in your role and just understand and increase that financial IQ. So, along with that, and kind of understanding the financial statements, but also understanding the time of month and being aware of maybe where their accounting team is in the month end close, right? So we stand here, mid August or so August 19th, in our industry, a lot of the July financials are near completion, have been completed to be finalized. And so why does that matter to me as a business office leader? Because you understand that the data that needs to be captured, most of that data has already been put in the system and been communicated with the team. But say something significant comes across, right? In accounting, we like to say if it's to determine whether it's material or not, right? So usually if that's a big expense, something that's gonna, change maybe some decision making or really be something that's important to get in there, understanding where your community is and its financial close process can help say, oh, you know what, this is something that's significant. Let me reach out to whoever is owning our financials in terms of getting them complete and over to the stakeholders. And this is something that they need to have. Additionally, along the lines of that, if the 20th is when the financials are due and they've already been completed and sent on, hopefully it's been communicated to you when those cutoffs are, without a shadow of a doubt, hey, I cannot go back into a previous period. All this data that I have, even if it is something that could be maybe material at this point, maybe it has to go into the next month. But really a good practice to let your property accountant, let your leader be aware of that. And so that's why it's important to understand, where we are in the month and how I can help support. Again, just going back to the business office and your role and what you want to kind of understand and know what's taking place, on the 19th, that's a good chance that most of that information is in. But if something comes across that's really significant, whether it needs to get in or not, because you want accurate financials. You want the decision makers to be able to see that and say, okay, because they're making decisions based on the numbers that are being reported. So it's important for you as you're kind of owning that role to be able to communicate that. So we know we're moving into the income statement from the move in. We talked about kind of why it's important to know when the books are being closed, why it's important to be aware of that. Another tidbit I want to take my time. Forgive me. I want to take my time on the move in just because it's so many things that's there. So one of the things that come up quite a bit are the incentives, right? So important for you to understand the incentives. I think I did a video on that before, but you want to be able to capture those incentives at the time of move in. Kind of, the best practice there, right? Like you want to be able to understand the incentives that the community is given. You want to be able to make sure that the lingo that's being communicated to the residents, that the marketing team is communicating, that you're able to interpret that, and you want to be able to capture that at the time of moving. You do not want to put the responsibility on yourself to have to go back and remember, in 3 months this person got concession for the rent, and so now I need to go book it in the system. Okay, so very important to know that, and I might have mentioned that in the last video. Very important to know that, because now we get into here of the discounted incentives line item, right? So at the time of move-in, if we knew that there was an incentive going to be captured here, and say maybe just 50% or so, then that's where we would want to hit that, and we see that the total revenue number decreases. Right, so we're looking at gross revenue. So when you're being expected to report gross revenue, we're saying, okay, what's that gross revenue, and then now what's the total revenue and net revenue? So less any concessions or incentives that were given. So again, very important to capture. You see those are shown in separate sections of the profit and loss statement. Very important for stakeholders to understand what concessions are we giving, right? How aggressive are we having to get with concessions? In regards to the competition up the street. We see senior living communities all around. And so a new one's being built right across the street or down the road. Sometimes we have to get more aggressive in our concessions, and stakeholders want to be able to see, well, how many concessions are we giving? And so it's never a case where we say, hey, this person got free rent, so we just don't show it. In essence, on a ledger, it zeroes out, so you can almost see how that thinking could be in place, but it needs to show on the profit and loss statement so that the readers are educated and able to make better decisions and see that in their face, instead of having to drill into the numbers or ask a lot of questions because it wasn't apparent on the financial statements. We want very clean profit and loss statements. We want the readers to be able to see that and understand what's going on at the community, to get a quick read on things, so that we know that, hey, let's continue in this direction, things are good, or let's pivot. And so it's important to get that information quickly and timely. So putting concessions in at the time of move in is going to be awesome to capture, so that you make your jobs easy. It would keep families happy. We don't want to send out a bill and then we get a call like, hey, I was supposed to get $2,500 off the rent. What happened? And then it's like, oh yeah, let me go and put that in. Right, going back to keeping healthy ledgers, keeping them clean, and taking advantage of the system so that they can do a lot of this stuff for us. So again, in this case, we got full rent. We got our community fee now that was sitting on the balance sheet that we rolled over to the P&L. And then if there was an incentive, we're able to see what the net revenue is in this case. Okay. The incentives can get pretty interesting in many cases, right? Like if somebody got a concession for the community fee deposit, and so at the beginning, going back to where we talked about reservations, and if the family only put $500 down at the time, again, the charge would be $500. We like to always say cash equal charge at the time of the deposit, right? So if they put $500 down, we put a charge in the system of $500, even though the market value of that deposit slash community fee is going to be $2,500. We would show that at the time of move-in. So we put a $500 charge, put the cash in the bank, clear that AR, and then at the time of move-in, if they were only responsible to pay 500 of the 2,000 at the time of move-in, we would have a line item. Depending on your community, you may have it all in one line, or we have it spelled out on what it would be. And in this case, you could have something that says community fee discount or community fee concession, however you want to name it. And we're able to say, okay, we had $2,000 here of a concession. And here you see I cannot even type, but we had $2,000 of a concession, and we're just going to change the formulas around a little bit. But to capture that, right, because that's something that's important to know. We still want to show on the income statement $2,500 because that's the market rate of that community fee, and that's the income we're going to recognize GAAP accrual accounting. But there was a concession of $2,000. So net, there's $500 in the bank that went towards that, which we got at the deposit at the time, and then we rolled it over to show the income. So we showed the full $2,500, but we do want to show stakeholders and everybody, hey, there was a $2,000 concession, so that was not cash that we got in the bank. Okay, so if this was a true scenario, there was a concession of $2,000 and then another discount going towards the first month's rent of $2,500. So now we can see a total concessions of $4,500, right? And get to see the true net revenue of $3,500, but ultimately should equal the cash that we'll receive. So it's just very important to capture that in the right buckets. And I'm stressing that because there's just a lot that we can talk about just here. But very important to be able to capture that in the right bucket. So again, once those financials are produced, then we can see clearly what concessions were offered. We can see clearly of, okay, that's the net revenue. That's the cash that we can expect to see very soon. Because that brings us into another conversation of AR and tracking AR and making sure that we're getting timely payments. And hopefully we've got a lot of participation if our community offers ACH. If there's not, want to get with best practices and make sure that's happening. Maybe put an ACH form and at least sitting down, say, hey, this is how we pay. All things to make sure that this $3,500 is what we're collecting every single month, because that number easily swells to 350,000. We want to make sure as we're doing this, we're collecting, right? So real quick recap. So understanding that 8,000 with concessions is netted down to 3,500. All the things that we're tracking, billing the resident through AR, showing it on the financial statements, seeing whether the top line revenue is, but then also saying, okay, if there's concessions, then I also want to produce that. I don't want to just put it in the same account and it goes to zero. I want to show that somewhere else so we get the full picture of what the net revenue is. And I want to know that stuff, and I want to look and run my financials. I challenge you to go and run your financials and look at the profit and loss statement and just see what it says and see if you can interpret that, right? Whether you're using Yardi or whatever, go in there, run the financials and see if your financials are set similar to this and say, okay, why do we do that? Ask the question. Okay, why does that look like that? If you have not already, if you're not very involved in that process and you're doing a lot of the work and you're producing and building the financials, but you haven't taken time to say, okay, now let me look at it and see, basically what I've contributed to it and where things are and if they're being categorized in the right spot. Right. And as you understand that, it just makes for a better product. Right. And the financials, as they roll up and go to your leader and the operator and then the investor, it just makes for a better product. And you're able to, as you're speaking with your property accountant, if your community is set up that way and you're involved in those conversations, a lot more things just start making sense. And then understanding why they're asking for certain things. And that's really just the passion behind this call is just, if you're seeing financials for the first time, looking at them, knowing what you're looking at, by no means looking to be trying to get you to be an expert on reading financials, but hey, it wouldn't hurt. Again, having strong business offices in our industry and trying to help improve the every single business office in our community if we can. But if we can help one, we'll take advantage of that opportunity to do so. And so. Look at your financials, see if any of this, falls in line. And if there's any differences, come back and bring those questions to us and ask those questions. And this is what this support call is for. So I think I'm going to kind of pause it right there. And next week we'll continue. We'll go into, taking this even further, maybe looking at some more incentives and just talk through more things that happen once residents move into our community. What are some other activity that or things that'll happen that we have to record financial activity on? So maybe there's a unit transfer, maybe there's some rate increases, right? That's definitely going to happen. Ancillary charges, right? We have beauty and barber. We have various resident supplies that will go in. So all those things that, regardless of what accounting system that you're going to use, that we've got to go and bill, and we want to see where it falls out on the P&L. Right, go back and ask those questions. Like, when I put this in, where's it going to fall out? I want to understand that. And it's going to help you be able to read those financials better, help you have more confidence in your role, help you support your president, right? Because we want to support presidents, we want to support other leaders and team members, we want to support our residents. And all of those have, some type of financial component to do that. And that's what we're here for, to help you guys out with that. Awesome. Well, thanks again for being plugging into this training call. Again, we are here weekly. We're here for you. Plug in, ask questions, come on, just be silent, whatever. These are eventually going to make their way to YouTube. So you have a library of videos, and we'll keep doing these and have different channels where we're just going to pour as much content as we have. I mean, I've been doing this for almost 10 years, and just everything that's in my brain, everything that I've seen, issues that I've seen, if I can help you avoid some of those issues that I've seen on countless business leaders that I've worked with, then that's I think it's going to be a huge benefit to you, right? Again, if you're aspiring to be a business office, plug into this channel, right? This would be amazing to see and hear and form some of this language, so that when you're speaking and talking and being able to interact with the team, you know what you're talking about, and there's just a constant improvement to that business office on the accounting side. So once again, Burdett, Tatum, I appreciate you guys taking the time. We are here to support you, and we will catch you next week. Thank you.